as the weeks and months go on, that all the money just keeps piling in this concentration bubble that we have. And my fear right now is you have both advisors, retail clients, just general investors. Obviously, they're putting all their money in these Mag 7 names, which is just continuing to make them go up.
My name is Mike O'Gayed. I'm here at the NASDAQ celebrating the Granite Shares Yield Boost launch, TSYY. And I've got my good friend here, Mr. John Benedict. We've got a number of advisors joining us to celebrate today's occasion. John, I've known you for a long time. I'm a big fan of your work. I know you're big on tactical. First of all, I want to hear about what worked this year and what didn't. What were some of the major portfolio moves that you made?
Well, thanks for having me, Michael. John Bennett with J2 Capital. The things that worked this year, I think that everybody kind of knows that the big Mag 7 tech stocks were the real big winners this year. Outside of that, it was a difficult year for active managers, especially those that allocate assets across different asset classes internationally. It was very tough for them. So you had to kind of be overweighted to those tech stocks in order to have good performance this year.
Do you think that that's going to continue next year, or are there going to be other active opportunities?
Well, one would hope that asset allocators would have a chance going into next year, diversifying assets, right? But it seems to me that as the weeks and months go on, that all the money just keeps piling in this concentration bubble that we have. And my fear right now is you have both advisors, retail clients, just general investors. Obviously, they're putting all their money in these Mag 7 names, which is just continuing to make them go up.
I think the hope is that AI obviously expands beyond those names. I know you and I have talked about you wanting to implement AI in your own practice, explore that.
Right.
So
I think it's going to be huge.
Where's that lag? When's that going to start to kick in, you think? Because I think that's where the other opportunities start to really make sense.
So this is where the revenues from the AI start to kick in for other companies? Well, I don't think we know yet, right? It's a big capital expenditure on AI right now with the hope that it's going to lead to all these things. But just from the stuff that I see, I think this is the year for what are called AI bots, right? These are little worker AI engines that can kind of take over certain duties of maybe your practice or just even normal people, whether it's editing documents, making phone calls for you. I mean, it's pretty incredible some of the stuff that I see going on.
Switching gears, the other big story this year obviously has been gold, right?
Yes. Incredible
year for gold. One of the rare years where the S&P has done really well and gold has done really well. I'm curious if you have any thoughts on gold in particular, or how that might look next year.
Yeah, so I think it's good you mentioned gold because gold is the one asset class that you could diversify into outside of the Mag 7 this year. So people that have done that and had a decent sized position probably have done well. You look around right now, you got these central banks around the world that are kind of hoarding gold right now. I think I read an article yesterday where you have China right now that I think that they're holding more gold than that even they were announcing that they're figuring out. Sure. I don't know where the report was from. And then maybe you look at some of the issues the United States has with the deficit spending right now and maybe some of the debt, so you have this kind of perfect storm that kind of came together for gold. But gold's always a great diversifier in the portfolio depending on your position sizing there.
So Will Ryan and I host a show called the High Conviction Podcast. And we always like to ask the question, what is your high conviction for next year?
Yeah, so that's interesting, right? So I think you got to take a step back as an investor right now. And here's the way I look at the world right now. You have to decide what investment world we're in, okay? And I'll explain. On one end, you have the old investment world. These are things where valuations matter. You could crack open a textbook that talked about how to value stocks, right? And then that mattered.
I don't even know what a textbook is anymore.
Right. Well, they don't. Right. They do exist out there. You can still get them. Things like recessions and business cycles actually happen, right? If that's your belief of where we're at, then probably staying with maybe not going crazy in the Mag 7 because of the valuations. right? Maybe having some opportunity cash on the side, kind of the old way of thinking asset managers would. However, one also has to consider that maybe we're in a new investment world or investment paradigm right now. What that looks like is it possible that the Fed has been able to repeal recessions going forward? I mean, you look at since '08, right? And couple $1 trillion in '08, another $7 trillion during COVID, all these acronyms, twists and programs that they're coming up with, buying bonds. It's very likely that we've reached a place in the economy, in the market, where stocks are the economy.
Sure.
And they cannot afford or allow a typical business cycle to take place. So what does that look like? Sure, markets can go down 10, 15, 20%. I'm not sure that they're willing to allow them to go more than that because of the amount of leverage that's in the system. So what you're going to have is if they say, hey, we're going to let a business cycle happen, what you're going to see is you're going to see something that looks like a depression at some point because of the leverage that's in the system. So my belief is maybe you got to rethink things, which that means that you can stand through these drawdowns a little bit longer than usual, right? You should buy on these pullbacks, any 5, 10, 15, 20% pullback you should buy. As far as conviction, if we're in this new paradigm and valuations may not matter as much anymore, then why not the Mag 7, right? I could make a case. And this is coming from somebody that over the course of 25 years has been a contrarian, mostly macro bearish, okay? But I'm coming around to this new way of thinking, potentially, we don't know, right? And as soon as I say it, I'm sure we're going to be in the old investment world again. But, holding gold, right? It's got the momentum right now. It's a perfect storm, like I said, the Mag 7. And then I'm going to throw in there crypto as well, right? We don't know what the future holds for currency or crypto. The AI, crypto are the two big mega trends right now that people probably should have exposure to. I don't know how much, but these are the two things that people are excited about. And I think crypto actually helps AI out with its blockchain capabilities. I think it's going to be needed in the future. And what I see amongst clients is really nobody holds an allocation to crypto, especially, right, if you're dealing with clients 50, 60, 70 years old, they don't understand it. So my advice to advisors would be is to understand it, right? Maybe it deserves an allocation in a diversified portfolio right now. Whether that's 1% or 2%, I don't know. But somewhere along those lines, I think it makes sense to have it be part of the asset allocation.
My takeaway from all this was few understand this. For those who want to track more of your thoughts and also want to learn more about your services, where should they go?
Well, you can go to my website, j2cm.com. I do sometimes post thoughts on Twitter. Not as much anymore. Most of my thoughts come through if they sign up for a newsletter on my website. My blog is where they can find, where I post market updates too. And they can find my contact info on my website.
This is Michael Gayed on behalf of Granite Shares, the High Conviction Podcast. By the way, folks, make sure you sign up to the Granite Shares Substack. That's graniteshares.substack.com, celebrating the Yield Boost launch by Granite Shares. Thank you.